Mark the date, January 1st, 2026. This is the day the global silver market fundamentally breaks. China's Ministry of Commerce has issued a new directive. Silver is now a dual-use item. It requires a special government license to leave the country. They aren't calling it a ban. They call it export control. But the smart money knows what this means. It means the exit door is locked. China produces and refines a massive percentage of the world's silver. For decades, that silver flowed freely to London and New York to satisfy demand. Now, Beijing has put a valve on the pipe, and they have their hand on the wheel. If you think the silver shortage was bad before episode 16, you haven't seen anything yet. We are moving from free trade to resource hoarding, and the price of silver is about to react to a supply shock the world isn't ready for. To understand what happens next, we don't need to guess. We just need to look at history, recent history. In 2023, China placed similar controls on gallium and germanium, metals used in chips and radar. What happened? Exports dropped to zero for months. The West scrambled. Prices spiked. Strategic industries in the US were caught naked. Now apply that to silver. Silver isn't just a niche metal. It is the lifeblood of the green energy transition and the AI hardware revolution. If China restricts silver exports, they are effectively weaponizing the periodic table. They are saying, we will build the solar panels. We will build the missiles. You can buy the finished product from us at a markup, but you cannot have the raw material. This creates a bifurcated market where silver is available in the East, but scarce in the West. We have talked about the Shanghai Premium, the fact that silver costs more in China than New York, episode 16. This ban exacerbates that spread. Think about the physics. If silver cannot leave China, the supply inside China increases relative to the rest of the world. Technically, this should make silver cheaper in China and more expensive in New York. But that's not what happens in a panic. In a panic, the Shanghai price becomes the real price because it is backed by physical possession. The New York price, paper, becomes the fake price because it is backed by empty vaults. The gap between the two will widen until the paper market breaks. We could see a situation where spot is $80, but Shanghai is $120. Who sells at $80 then? Nobody. Liquidity on the COMEX evaporates. The bid-ask spread widens to $5. The market ceases to function efficiently. Why is China doing this? It's about solar dominance. China controls 80% of the solar panel supply chain. They know that silver is the bottleneck for the new, efficient TOPCon panels, episodes U12. By restricting exports, they ensure their own factories have first dibs on the metal at a domestic price. They are subsidizing their own industry while starving their competitors in the US and Europe. If a US solar manufacturer wants to build panels, they have to buy silver on the global market at the squeeze price. If a Chinese manufacturer builds them, they get the domestic price. This makes Chinese solar panels cheaper and Western panels uncompetitive. It is industrial policy disguised as export control. They are cornering the energy transition. This is a nightmare scenario for the Western banks who are short silver, episode 17. They are short paper contracts. They need to deliver metal to close them out or buy back the contracts. If the supply from the world's third largest producer is cut off, where do they get the metal? They can't. This export control acts as a catalyst for the short squeeze. It removes a massive chunk of supply from the pool just as demand is peaking. The banks will be forced to cover their shorts at any price, and since they can't buy physical from China, they have to bid up the price of the remaining silver in Mexico and Peru. This creates a bidding war for the free float of silver. The price doesn't just rise, it gaps up. There is a deeper layer. China isn't just keeping silver for factories, they are keeping it for the vaults. The People's Bank of China, PBOC, has been buying gold for 18 months straight. The smart money believes they are now buying silver too. They are building a strategic resource reserve to back the yuan, episode 2. If you are preparing for a war or a currency reset, you don't export your strategic assets for paper dollars. You hoard them. This ban is a signal that China values the metal more than the money. That is a profound shift in global economics. It means the era of cheap commodities flowing west is over. The West now has to pay the real price, the price that includes scarcity and geopolitical risk. What happens when the public hears China ban? Panic buying. We saw it with toilet paper in 2020. We saw it with chips in 2021. When people think they can't get something, they want it immediately. If the news breaks mainstream that silver is being blocked, the retail investor will rush to the coin shop. But the coin shop is already low on inventory. This creates a flywheel effect. Price goes up, news reports shortage, people panic buy. Inventory vanishes, price goes up more. We are entering the mania phase of the bull market. The China ban is the match that lights the fuse. Let's summarize the investigation. The China export ban is a game changer. It creates a physical wall between supply and demand. The smart money playbook: 1. Expect the gap. Prices may gap up violently on news. Don't chase the initial spike with leverage. 2. Physical is king. In a world of trade barriers, paper contracts are worthless. If the metal can't leave China, the ETF can't source it. You need metal in your jurisdiction. 3. Watch the miners. North American miners, Mexico, Canada, USA, become more valuable because their supply is safe and accessible to the West. They trade at a security premium. 4. Hold the line. Do not sell your silver just because it jumps $5. This is a structural break in the market. The repricing has just begun. The wall is built. The supply is trapped. This is the smart money wisdoms. The future belongs to the owners. Thanks for watching. Like and subscribe. See you next time.